Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. In this video, we will be evaluating the portfolio performance for May 2025. The portfolio grew a lot, so be sure to watch through the end of the video to find out what happened. Before we get started, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get started. Cue the logo. Let's start off with the market's performance. For the month of May, the S&P 500 gained about 6.2%. The market recovered well from the large dip in April, though new all-time highs were elusive. When we look at the companies that make up the S&P 500, we can see that all is well in big tech again. Companies like Microsoft, Nvidia, Amazon, Alphabet, and Meta all gained. Only Apple had a losing month. Over in our corner of the market, non-alcoholic beverage, farm products, alcoholic beverage, confectionery, and consumer packaged foods companies all fell, while restaurant companies had largely mixed performance. Okay, let's move on to the portfolio performance. I deposited $100 into the account on April 1st, 2025, and at the end of the month, the portfolio balance was $1,188.92. This means the portfolio gained $87.17 for the month, representing a 7.9% gain for May. It is good to generate positive returns. Given the S&P 500's 6.2% return, we gained 1.7 percentage points of alpha by not being invested in the S&P 500 this month. This means we have outperformed the S&P 500 for the last 4 months. Well done me. Looking at our performance chart versus the S&P 500, we see that we had been trailing from inception until February, but closed the gap in March and have been outperforming since. Since inception, the portfolio has had an 8.5% return on a money-weighted basis, while the return on a time-weighted basis was 8.1%. Given the S&P 500 8.0% return, we have gained 0.5% of alpha by not being invested in the S&P 500 since inception. However, this win comes with a caveat. The S&P 500 performance tracked here only includes share price appreciation. It is not total return, unlike the monthly S&P 500 performance reported earlier in the video. Therefore, we are actually probably closer to just breaking even with the S&P 500 on a money-weighted basis. Now let's look at the portfolio moves for the month. First, I bought some Pepsi on May 2nd. On May 8th, bought Texas Roadhouse. On May 9th and 13th, bought Chipotle, and also bought Pepsi on May 13th, 14th, 22nd, and 27th. On May 28th, I bought more Chipotle, and on May 30th, received interest from the cash position in the account, and also got that small but sweet Starbucks dividend. I have been trying to be much more strategic with my stock buys, and it shows with the reduced portfolio activity. Okay, let's take a look at some key holdings in the portfolio. Celsius remains my largest holding, with 6.59 shares at a cost basis of $32.08. This position is up 18.1%. Celsius makes up 21% of the portfolio. I have been working to decreasing the weighting in the position by buying up other companies, but I am happy that it remains a strong number 1 position in the portfolio. Next, we have Wingstop. Wingstop is my number 2 holding with 0.61 shares at a cost basis of $278.7. This position is up 22.6%. Wingstop makes up 17.5% of the portfolio. Wingstop was the driver of my gains this month, with the share price rising around 30% this month. This restaurant is one of the most efficient growers I have ever seen, and I do plan to buy more on any big pullbacks. Next, we have Pepsi. Pepsi is my number 3 holding with 1.5 shares at a cost basis of $149.40. This position is down 12%. Pepsi makes up 16.6% of the portfolio. I have been lowering my cost basis on this position very slowly. The near-term growth prospects are not great, but I do believe Pepsi will be a strong position in the portfolio in the mid to long term. Skipping down to my coffee positions, Dutch Bros and Starbucks hold the 8th and 9th positions in my portfolio, with Dutch Bros comprising 2% and Starbucks comprising 1%, respectively. I would love to add to both of these, but Dutch Bros is a bit overvalued and Starbucks' growth outlook is a bit murky. I think there will be better opportunities to buy more shares of both companies in the future. Again, This month I have a decent cash position of $134.18. This makes up 11.3% of the portfolio. I do not want to hold a much larger cash position than this, but am happy to have a bit of dry powder to take advantage of this year's incredible market volatility. As far as the weighted average metrics for the portfolio, cash conversion cycle is the only metric that improved this month. Revenue per share growth, free cash flow per share growth, return on invested capital, and net debt to EBITDA were all worse this month. Gross margin and yield on cost were unchanged. Zooming out, 2025 has been an extremely volatile year. The on and off tariff policy changes have been jarring to say the least, especially in the food industry where companies like Hershey and Chipotle have to import cocoa and avocados to generate revenue. As I have stated many times, tariff talk, both good and bad, is masking the real issue, a slowing economy. Ultimately, people will still have to eat, though the amount of money they spend to eat has been decreasing over the past several months. My portfolio should weather the storm as I focus on investing in companies growing their share of the market, regardless of industry-wide changes. Many thanks for watching. What do you think about the portfolio? Share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.